Hey everybody, it's John Seville from Acorn Wealth Corp here. It's been a wonderful week of trading so far. I hope it has been for you too. For those of you who are new to Acorn, welcome. The short and the sweet is we are real traders with our own money on the line every day, and we've been doing this for the last 10 years, and we basically train people from all over the globe to reduce their risk and increase their profits by spotting consistently winning trades in stocks and options. That's it. How do we do it? Through technical analysis and playing into the manipulation of the market. So before we get started, I want to go just a quick disclaimer for anybody who still reads these things. There you go. Have a quick read. And we're going to get into it and show you a trade that we did last week with our own money, show you the entry, the exit, and how we picked it, and how you can do it yourself. Before we get to that, though, I want to ask you a real quick question. What is your strategy? And what I mean is, if I gave you a pen, a paper, what you draw in terms of the chart that you're looking for. So what should exactly the chart look like if you're going to buy? And once you find that, what exactly are you looking for from what indicators to confirm it? If you don't know what exactly you're looking for, how are you going to find it? Professional traders know exactly what they're looking for, and they know exactly what criteria should confirm it. And this is very important when you're getting into trading, because if you don't know what you're looking for, you're just going to be going through hundreds, if not thousands of stocks every week, wasting time. And by not knowing precisely what you're trying to identify, you're going to be using a lot of conflicting signals potentially and things that outright don't work. And that's why a lot of investors don't get any consistency and miss opportunities. Because different stocks have different personalities have different trades. So if I'm looking for a double top, which is a very successful shorting pattern, I'm going to be using completely different scans with completely different indicators, as for example, if I was looking for a cup and saucer, or a scallop, or a bump and run. And all of these different personalities I'm mentioning have different recipes. You need to know the recipe if you're going to make money, because each chart tells a different story. So, for example, a common mistake is people see a chart like this where it's going up, and they see the lows are getting higher, and it keeps hitting this same ceiling, bang, bang, bang. And the next most probable breakout here is to the upwards movement. So you see this is called an ascending triangle. That's how you make money to the upside. But a lot of beginner to novice traders, or even intermediate traders, often mistake this for this pattern on the right, where it's still a triangle kind of going upwards. But in this case, yes, the lows are getting higher, but so are the highs. So it kind of looks like a pizza wedge where it's consolidating as it points upwards. And this is not an ascending triangle. This is a rising wedge, and this is actually a breakdown. So if you were confusing it for the one on the left, thinking you're going to make money to the upside, and all of a sudden you lose money, that is something you need to identify the difference between. That's why most people lose money. Again, they don't have a strategy that is precise and know what they're looking for. And that's where we get into the personality of this week's trade. Basically, what we are looking for is Bollinger Bands on this week's trade. We're looking for a stock that has essentially dropped to a point that it has to go back inside. So Bollinger Bands essentially look a little bit like a river, and they show you where the stock moves in and out of, or swims back and forth between. Statistically speaking, when you draw Bollinger Bands onto a chart, it will show you where about 94% of all of the movement will happen. So let me talk a little bit more about that. If you spent 94% of your time inside the house, like this lady over here, and you were outside, someone came to visit you and you weren't there, what would be the best thing to do? To go running around looking for you, or to simply wait for you to come back home? I hope you said come back home, because that is the obvious answer. Same thing with a stock. If a stock is outside of its Bollinger Band, that is when we want to be thinking of it reversing to go back inside the Bollinger Band. And that is what the trigger is. So with this next trade, we were looking at CXW. This is a trade we bought last week on Tuesday. So the trigger on this CXW was last Tuesday on June 4th, and we actually saw that the stock, firstly, was outside of the Bollinger Band. So if you look over here on the right, here are the bands, the blue line and the red line, that's the river, and the stock was on the bottom, had broken out of the bottom of it. Now look at other times that it had broken out. Over here it went out to the upside, went back down. Again, broke out to the upside, came back down. When it went out to the bottom side, went back up. You can see this pattern. Whenever it's broken out, it usually swims back inside it fairly quickly afterwards. And this is the first thing that we were searching for. So our program actually scanned the entire stock market on Monday night and told us that, the stock is outside of its band. So this is the trigger to consider getting in. So now we knew it was outside the band and likely to go back in. Now we needed to look at why at this price will it go back in? Why not 2 or 3 days later when it's dropped even further? And this is where you need to look for a support line. And as you can see here, if we connect this bottom and this bottom, and that's what you need to do to draw trends. Don't draw from right to left. Draw from left to right. Otherwise, you start justifying where you want the line to be instead of where it actually is. And we drew from left to right, extended that line, and we could see not only did the Bollinger Band, the trigger, say it should go back up, but there's a support line that it was bouncing off as well. And therefore, we bought options. And options is essentially a leveraged way to make money on the stock, because we just wanted a small movement up, but we wanted to have a big profit. So basically every 1% the stock would move, we assumed we'd make about 10% on the option. And let's go forward one extra day, and there you go. You can see on the right, the stock did bounce 2 days later, and CXW, or Corrections Corp of America, jumped up to $35.75 from $35, and the options were actually up from the 35 cents we bought them at, and we actually sold at 2 different points throughout Thursday. The first one I took some profit early on. I'd made 30% already, almost, from 35 cents to 45 cents. So I took that profit, and then later in the day, I had an order set up to sell it, and it sold at 65, which was just around an 80% profit for the day. And in fact, you can actually see, here's a screenshot from my brokerage account that I was posting to show a couple of students. And there's the actual where we bought it for the 35 cents on June 4th. And there's where we sold it at 45 cents. I think I've actually got I can show you the other exit here as well. We'll go into the brokerage platform and just bring up that. Yeah, so there was the other sell later in the day at 65 cents. And you can see that was exactly why, we're looking to get out. And the reason why was because I could see that the last time the stock had rallied, it went right up into this resistance point. This time, straight down. This time, flattened out. So again, the exit point was based on that price that the stock kept on reversing at. Now, this is why it's important to have very specific strategies, because once you know what you're looking for, you can scan for it. It will save you hours and hours and hours, and your time is valuable. Think about how much value your time is worth. I charge hundreds of dollars an hour, much like a lawyer or anyone working in this type of industry would, that knows how to trade. You should be valuing your time the same way. And so if you can save yourself 4 or 5 or 6 hours a day from being able to find the stock you're looking for immediately, think about how much money that's worth to you and how much more money you can therefore make by being efficient and spend more time doing things that you enjoy. Basically, what we're doing is we're actually offering a series of stock newsletters that you'll actually get every day, which shows you how to implement these strategies. And all you need to do is actually go to the link below this video and click that, fill out your name and email address, and we'll actually send you a week of all of the stocks we're looking to trade in the next 7 days. So you can see how we found the stock, how we scan for it, entry and exit points that we ourselves are looking to put our own money in, and you'll get that. No credit card required. We just simply want to show you how we work with the market and hope to impress the pants off you. And of course, we hope that you'll also spend those next 7 days wondering why you hadn't found us before. Well, this is John Seville out, and we look forward to seeing you again soon.